What if I told you that America's largest used car retailer just admitted to a fatal miscalculation that was worth about $5.2 billion, and its longtime CEO was shown the door? Well, believe it or not, that's exactly what's happening at CarMax. In early 2025, CarMax bet big on new auto tariffs driving up used car demand. The company stockpiled thousands of late model cars and they were expecting buyers to rush in. CarMax even warned that the tariffs would drive up used car prices and reconditioning costs. They positioned themselves as one of the big winners from Trump's tariff announcements, snatching up SUVs and sedans like never before. But as we'll see, that gamble backfired spectacularly. So, just before we take a deep dive into what went wrong, do me a favor, smash that like button and subscribe so you don't miss our next expose. Thank you so much and buckle up because we're counting down 7 shocking ways that CarMax's strategy collapsed, starting at number 7 with the tariff gamble going wrong. So in September 2025, CarMax aggressively expanded its inventory of 6 to 10-year-old vehicles. Reuters reported the move was driven by expected US tariffs on new cars, which were supposed to push budget shoppers towards used cars. But in fact, CarMax executives publicly prioritized those newer used cars, saying that tariffs could turn their lots into affordable havens. And for a while, that looked like a smart bet. The used car lots were full and sales were hot. But sadly, this was a house of cards. So when the tariff talk died down and new car prices held steady, well, demand didn't quite materialize as hoped. So that meant CarMax was left sitting on an enormous pile of inventory that it paid top dollar for. Reason number 6, the inventory overload and the price collapse. So by Q2 of 2025, the consequences hit the bottom line. CarMax reported a sharp profit drop as excess inventory built up, depreciation costs and falling used vehicle prices crushed its margins. CEO Bill Nash admitted the company had ramped up inventory after a spring sales spike, only to take about $1,000 depreciation per vehicle from mid-May through to June. So in plain terms, those thousands of cars quickly lost value. CarMax was forced to slash its own prices to move the cars, further bleeding into the profits. The results? Well, customers suddenly had the upper hand and CarMax's once predictable profits nearly evaporated. Now, as one analyst warned, the used car narrative had turned cautious, with CarMax losing market share as competitors adjusted far faster. Down to reason 5, the auto finance implosion. So the trouble didn't stop at the showroom floor. CarMax's in-house lending arm, called CarMax Auto Finance, also took a huge hit. In the same period, the company quietly boosted its loan loss reserves by tens of millions of dollars. In fact, industry analysts noted a roughly $142 million spike in loan loss provisions at CarMax's finance arm. Now, that means more buyers were defaulting on loans than they expected, and that eroded the financing arm's cushion. One report bluntly said this wiped out what had been the company's safety net for earnings. So, in short, subprime-like loan losses were piling up on top of sagging sales, adding yet another layer to the crisis. Down to reason number 4, misleading growth hype. Now, throughout this turmoil, CarMax's management had been singing a very different tune. Early in 2025, they touted the company's growth as rock solid. The board even talked about double-digit EPS growth for 2026. But Much of that growth turned out to be a total illusion. Lawsuits now allege executives recklessly overstated CarMax's growth prospects, knowing that the early 2025 boom was just customers buying ahead of the anticipated tariffs. Now, in reality, the company's brief surge was a one-time bump, not a new normal. Even CarMax's new board chairman admitted privately that recent results do not reflect the business's potential and change is needed. The truth? Management kept talking up a story that was already crumbling. Now, hold on to your seatbelts because the final 3 points are even more dramatic. We're now talking legal battles and a near total meltdown in CarMax's valuation. So, in a matter of weeks, investors saw half of the company's market value wiped out and the CEO shown the door. By the end of 2025, CarMax was no longer the safe harbor it once was. Now, these next entries explain exactly how CarMax went from market darling to cautionary tale. And it's not something any used car buyer or investor can simply ignore. So stay with us as we reveal points 2 and 1. So continue before we get there on to reason number 3. The CEO, Bill Nash, was ousted on November the 6th of this year. So CarMax dropped the bombshell. Bill Nash would step down as CEO effective on December the 1st. See, Nash had led CarMax for nearly 10 years, but with these mounting failures, well, the board simply lost confidence. CarMax named retail veteran David McCreate as interim CEO and even brought back former CEO Tom Folliard as interim executive chair. Board chair Folliard later admitted in a press release that CarMax's recent results do not reflect the company's potential, and that's a not so subtle jab at the old guard. And of course, the markets reacted immediately. CarMax's stock plunged about 15% on that day. Investors saw the CEO exit as confirmation that leadership had failed to steer the company, signaling the severity of the crisis. Down to reason number 2, the shareholder revolt and class actions. Now, with the truth coming out, angry shareholders went on the offense. On September 25th, when CarMax reported its Q2 collapse, the stock cratered over 20% in one single day. Then on November the 6th, the CEO exit news knocked off another 23%. So, as you can imagine, multiple class action lawsuits quickly followed, accusing CarMax of misleading their investors. The complaints say CarMax's promises were entirely hollow, that executives hid the tariff-driven nature of earlier sales, and they brushed off the exploding loan losses. Now, in one filing, lawyers alleged that CarMax touted sustainable growth while knowing the real story was a temporary tariff boost that it failed to disclose. In other words, investors felt defrauded, quite rightly, and now federal court cases are holding CarMax to account. The legal fallout only deepened the crisis and it sent fear rippling through the market. So, after all that, we're down to reason number 1, and that is the biggie, the $5.2 billion reckoning. So finally, it all adds up to one sobering figure. CarMax's market value after these events, well, CarMax stock trades around $35 a share, putting its market cap at roughly $5.2 billion. And that's less than half of where the company stood just a year earlier. In effect, the company has lost about $5 billion in shareholder value in just a few months. Now, this gigantic wipeout is the ultimate mistake. It's the market's verdict on the missteps of 2025. A vehicle dealership chain built on trust is now worth a fraction of its former self, and its roof has got big cracks in it. See, with Nash gone and the lawsuits pending, CarMax's fate depends on a tense recovery. Will the new interim leaders fix the fundamentals and win back buyers? Well, only time will tell. So these 7 points paint a clear, if grim, picture. CarMax's downfall wasn't a fluke. It was a cascade of errors, such as overbidding on inventory, failing to foresee market shifts, and bearing bad news, all compounded by a broken business model. Now, for customers, it means be cautious and shop around. CarMax isn't quite as bulletproof as it used to be. For investors, well, it's a reminder that even market leaders can stumble hard when they get greedy or they get complacent. And do me a favor, guys, if you found this breakdown eye-opening, hit that like button and subscribe for more deep dives. And of course, don't forget, ring the bell so you catch our next update. And let us know in the comments below, have you bought a car from CarMax? And what do you make of this crisis? I promise we read every comment. So stay safe out there and drive wisely. And remember, you deserve transparency from your car seller. And in the meantime, guys, I'll see you on the next one. Have a great day.